Welcome to the True Wealth Podcast, where we specialize in helping aspiring homeowners break into the real estate market and help investors create and build wealth through real estate. We will be sharing some of our best advice around real estate so you can purchase your first home or grow your real estate portfolio, increase profitability, reduce taxes, and achieve financial freedom. Your host, Seun Adeyemi, is a certified financial planner, mortgage professional, and fellow investor. We want to help you get real so you can pursue your investing dreams with confidence. A real estate acquisition lifestyle is within your grasp. Financial freedom is possible when you have the right mindset, coaching, advice, and community. So, let's get real.
Welcome to the True Wealth Podcast. I'm your host, Seun Adeyemi, and I'm joined today for the show again, Othniel. Othniel, how you doing today?
No, I'm good, man. I'm good. You know, I meant to ask you about the intro, the introduction to the podcast, and the guy that's talking. Can we get another guy to talk? Somebody that's more local, somebody that's more culturally local. You know what I mean?
Unless you want the Toronto slangs and
that's what I mean. We need a Toronto man to sort of vocalize it. We'll look into that.
If you're listening to this and you wanna do the podcast intro, feel free to call in and send us an email, and maybe we'll put you on the new intro. So
that's it, yeah. Man. We're holding auditions for the intro.
Yes, we are. Yes,
sir.
But today we're going to talk about, I saw an article a few days ago that investors are losing money in Toronto real estate. And so I think it's a good topic to talk about. Is Toronto real estate still a viable investment for investors? We're going to look at some numbers and we're going to see what those numbers tell us. I have my bias and I will bring my bias into it, but my bias is backed up by the numbers and what the numbers tell us. So, Othniel, what are your thoughts?
Yeah, so we got this. So the article specifically referenced GTA condo investors, right? And I think that condo investment market is very sensitive to changes in any direction. So changes in the interest rate, changes in the supply, changes in the rental rate. It can all spell not catastrophic, but a difficult situation for an investor. I think, the reality is that a few years ago, like if you had bought a condo in 2012, 2010, you were able to get in at that point, things are looking pretty good because at that point, the market was different and not a lot of people there weren't so many eyes on the market. So you can get in on a condo for $300,000, some pre-construction condo, $200,000, $300,000. Today it's worth maybe $700,000 or $800,000. You can lease it out for $2,500 thereabouts, and you're cash flowing because unless if you get a line of credit or some sort of, you pull some equity out, your mortgage at this point is probably $150,000, $200,000 is nothing. Your carrying costs are low and you're cash flowing, no problem. I think it's really fragile right now for people who got in the last maybe 5 years and stuff, possibly took a variable rate mortgage. And as interest rates are going up, they're feeling the strain. So especially for condo investors, difficult time, especially within the last 5 years. So like I said, we could talk about the numbers and go from there.
Yeah. So let's look at the numbers. The average property price in Toronto, let's take a small condo, Toronto downtown. What am I looking at? How much? One bedroom, the smallest.
Yeah, so I took a look at some condos which sold recently. We're talking downtown, that's sort of west of Yonge, south of Bloor area, so pretty central downtown. You can pick up a condo on the cheap end there for about $630,000. $630,000 will give you one bedroom, one washroom, and it's going to be between 500 and 600 square feet. So $630,000, I'll put that back to you, Sean. What sort of mortgage and stuff are we looking for at that point?
So on a $630,000 mortgage, if it's gonna be an investment property,
that's the list price.
Sorry.
So
$630,000 purchase price. If you are going to be using that property as a rental, then it means you're putting 20% down. So you put in $126,000 down payment. Current interest rates on the A side, you're looking at 5.34, 5.4, give or take. Let's say a 30-year amortization on this property. So you're looking at an overall mortgage of $504,000. So your total principal and interest payment is $3,076. So let's just say $3,100. Now, because this is a condo, it means there are condo fees. How much are the condo fees?
Condo fees on a property like that, you're looking at about $450.
So $450 a month. Okay. Property taxes, how much are we looking at?
About $183 per month.
Okay. So $183 per month. So between principal and interest, property tax, and condo fees, you're looking at $3,400 a month.
Well,
that's before you start thinking about maintenance and repairs and anything, $3,400 a month. So now, can I get a one-bedroom apartment for that amount?
It's the lease rate for something like that.
For something like that.
Yeah. So you're looking at, like I said, it's a small one-bedroom condo downtown. On a good day, you're looking at $2,500 to lease that out, $2,500, maybe $2,600 to lease it out. The tenant covers the utility costs, which are about $60-$70 per month.
Mm-hmm.
That's it. You're looking at about $2,500-$2,600.
So my carrying cost is $3,400, but my income is $2,500. I think that tells you exactly what you need to know.
Everything you need to know. Yeah,
that's $900 deficit every month. $1,000, right? That's not sustainable at all. The only way I see this making sense, and even that's a stretch, is if you do short-term rentals with this. So it means that you furnish the property, you put it on Airbnb or something, or Verbo or something similar to that, and maybe rent it out for $200 a night, $300 a night, give or take. $300 a night, even if that is rented out for 20 days of the month, $6,000, right? The only way you're making money, Toronto, is if it's short-term rentals.
And then there's so many regulations around that. Right?
That's where I was going to. There's so many regulations around that. I'm not discouraging anyone from doing it, but you just got to be ready to put in the work, follow the regulations, and there's also things you have to add to that. There's maintenance, there is cleaning fees, there's a whole bunch of things that you need to add if you're going to do short-term rentals. So just looking downtown Toronto, the numbers don't make sense. So let's look further out, right? Let's look at Oshawa, for instance. What am I getting in Oshawa?
So in Oshawa, you could probably pick up a detached home, older bungalow. So we're talking about something that's like 60 to 70 years old. 3 bedrooms, 2 washrooms upstairs, maybe only 1 washroom upstairs. You'll probably pick that up for, again, the same $600. Not very big. It will be about 1,300, 1,400 square feet, but it has 3 bedrooms. It's freehold. You can pick that up for maybe, again, the same $630.
Okay. Yeah. So if we use those same numbers, the only thing I'm subtracting is I'm taking out the condo fees, right? And then property taxes are probably a little higher. How much are property taxes?
It probably takes about $3,400 or like $280 per month.
Okay. So my carrying costs are down to $3,000 from $3,500. How much am I renting that property for in Oshawa?
Probably, again, the same $2,600. Yeah, $2,600. So you're missing the condo fees there.
So it's a little better. I'm losing a little less money, but I'm still losing money, right?
Yes.
And so when I go back to that article we mentioned at the beginning, and I'm going to put this in the show notes if you want to take a look at it, it doesn't make sense in the GTA real estate market for you to invest in it. I think buyers should look way outside the GTA if you are going to if you're looking to get into investment real estate, I don't think GTA is the place for you.
Because the issue is cash flow, right? So, I mean, what do you think? I think, because I think a lot of people have convinced themselves that they're playing for appreciation and not cash flow. So they're willing to, on that actual property, maybe take that $500 hit, and sort of play, hope for appreciation. Do you think that's a good strategy? No cash flow?
No, I don't think it's a good strategy in the long term, because I've said this on previous episodes. I think the year-over-year growth in Toronto and the GTA real estate market has convinced people that they can get that appreciation on the back end. But that's not always the case. If you're going to look long term, we're talking 5 to 10 years if you really want to see that capital appreciation. And so are you going to be cash flow negative $500 a month for the next 5 years? Right? As a financial planner, I'm always looking at opportunity cost, right? That 120,000 or that 130,000, if I invest that outside of the real estate market and I get can I get a 5-6% decent return without all the extra costs and extra headache that comes with managing investment real estate, right? So I'm not saying investment real estate is a bad idea, but I'm just saying in the GTA, I don't think it makes sense, even when you're looking at it from the capital appreciation standpoint, because one, I don't think the properties are going to keep appreciating the way they were. And two, even if they are, you're going to be bleeding cash flow for a couple of years. How many investors have the ability to do that?
That's it.
Right?
And I should also mention that you talked about, and just to touch on this a little, management. We should also put in a 10% management fee, because I could tell you've been managing the property yourself. It can be a headache, especially if you don't live very close. It can be a real headache. So we should add another 10% on top of the rent as a management fee, just because you mentioned that.
Right. Another line item, even in addition to that, I would usually add is a vacancy rates, right? You're not always going to have 100% vacancy. So even if you add a 10% vacancy, all of a sudden you're now looking at your 2,500 is closer to 2,200. Right. So those numbers are not making sense. The GTA is not unless you're going to do short-term rentals and you're going to invest the time and energy to manage a short-term rental or even hire property managers to do that. GTA rental real estate is, at least right now, it's not attainable for many investors. And when you look at those prices, it also means that there's a certain type of income you need to be earning to be able to buy a property in Toronto, to be able to buy a property in Brampton, Mississauga, Ajax, Pickering. Question is, how many people can afford to buy in those places and as investments, right? It's not sustainable. And that's why for years I've been recommending, look outside the GTA, look at places like Woodstock, look north of Barrie, look at Windsor. Now, the type of population in those places are different, but there's a chance that you can break even or even make a bit more cash flow in those areas than in Toronto GTA.
Yeah, one thing about Windsor, because I hear a lot of talk about Windsor too, is that the appreciation isn't there, right? The properties just don't go up in price as quickly as homes in the GTA. The rent rates are relatively low. It's good if you can get a long-term tenant there with a property manager and just go along with your $300, $400, $500 a month cash flow. But it's just small amounts of cash flow. It's steady, it's slow but steady, and that could be probably the best avenue for someone thinking about investment, right?
Absolutely, and that's why I always say think long term, right? Think long term. Don't look for the home runs. Just something steady, not too expensive, that your income and your expenses are somewhat even. Even if I would still take $100, $200 negative cash flow, because that's sustainable if I'm playing the long game. Because the reality is, once I take that negative cash flow and I do the taxes on it, there's a chance that I'm slightly ahead, not by a lot, but just a little bit ahead. And so you've got to think long term. And the other part.
I was gonna say, and I think because we mentioned cash flow, I think a lot of people aren't doing their accounting properly when it comes to whether or not this property is cash flowing. We talk about vacancy rates. We talk about property management fee, maintenance and repairs, and stuff like that. So even though like you're carrying your official carrying costs of mortgage, property tax, and probably condo fees, or it could be like $3,000, and your rent is like $3,300. You're not quite cash flowing $3,000 yet because you still have a few other costs to consider going in. So I think one of the other big things is that you got to make sure you're accounting for all your costs. I don't know, what do you think that gap should be in order to get like $500 cash flow? Where do your expenses have to be, or rather, where does the rent have to be, and like the mortgage, property tax, and condo fees have to be?
Well, if you want a $500 cash flow, then you have to be looking at a property that if rent, the average rent is $2,500, $2,600, give or take. So what we do is we back engineer that and say, okay, if rent is $2,500, that means I need to be able to get a property that my carrying cost will be around $2,000 a month, right?
Yeah.
At $2,000 a month, then I'm looking at properties in the $400,000 range, right? In the $400,000 range, in the high $380,000 range. At today's interest rates of 5.34 for rental investment on the A side, then I'm looking at, even on a 30-year amortization, I'm looking at $1,900 a month, right? So the question now is, where can I find properties for $400,000, for $380,000? You're not getting that anywhere in the GTA,
and still be able to rent it out for $2,500,
and still be able to rent it out.
Thing. Yeah, because a lot of people, you could find properties like that, but based on the demographics and the population and just the rental market in some of these places, you're not going to get anybody to pay $2,500 to rent that house.
And I think that's where you now have to look at, how can I multiply the number of units in a property, right? So I have to look and say, okay, I may not be able to get one tenant to pay me $2,500, but if I can get one tenant to pay me $1,800, another tenant to pay me $900, then I'm closer to that $2,500 a month that I need to sustain that property. But with that also comes an added consideration on, well, now I need to make sure that other unit is registered. I need to make sure that it's up to speed. You can find some of those properties, you may have to put in a little bit of money to get it up to snuff. You may need to do some renovations. You may need to add separate meters. You may need to register with the municipality that property is. I think it's a long game, and I think it's a better strategy, right? You're doing everything up front. You're looking for the right property. It also means that when you're searching for these properties, you're not just looking at any properties. You're looking at properties that have the potential for you to duplicate the number of units in that in that investment. Like, what are your thoughts?
Yeah, I think that's what it boils down to. I mean, it's going to take some more upfront cash for sure. Because like you said, we probably have to do some renovations. If you're registering with the municipality, they're going to come in to make sure that you're meeting all the fire code. You got the right amount of exits, fire alarms, carbon monoxide, stuff like that. You're going to have to
fire-rated doors.
Yes, fire-rated doors, the whole deal. And so in order to stay in line with all the requirements put out there. So it is possible, but you're going to need some more cash up front. So on top of your 20% deposit or down payment, you're going to probably need another not 5%, maybe another 2 or 3% to make sure that the whole property is ready. Because again, a driveway parking space, people miss that. You're going to have to have 2 separate driveway parking. The tenants aren't blocking each other in. It can be complex. So, I mean, you can't take it lightly. And I think, and then this is the funny thing, I think years ago, like I said, maybe 10, 15 years ago, a lot of people sort of stumbled into rental properties, and it kind of worked out. Rental rates went high, and, you didn't have so many requirements in terms of registering basement apartments like that. And people were able to make a money, but obviously something changed in the last 5 years. I don't know. Can you speak to that? What do you think about that? Like, the whole game sort of flipped up in the last 5 to 7 years.
I think what's also happened is tenants, because of the astronomical increase in rental prices, what I've seen some tenants do, unfortunately, is that you rent out your basement and it's not registered, and the tenant gets wind of that. They'll report you to the municipality. They use that as an excuse not to pay you your rent.
Mm-hmm.
And then the municipality sends you a letter that you now have to get this place off the snuff. You probably have to work with the tenant on how to get them out of there. Now, in order to do that, unfortunately, tenants are asking, if you want me to leave your property, give me money, right? Pay me to leave your property. And so I think that's what's happened in the last few years is the landlord/tenant friction has somewhat increased. And because of the cost of living, the interest rates have gone up. So everybody's seen a pinch in their monthly cash flow. And so everyone is looking for, how can I get an edge somewhere? How can I get an edge somewhere? And so that's what's happening. And so because of that, and also because Airbnb came into play, because Airbnb is a more recent thing, right? It's maybe in the last 5 years. I mean, there's always been short-term rentals, but Airbnb really popularized that. And so because of those short-term rentals, neighbors started getting complaints. They started making complaints to the city officials. City officials started cracking down on, oh, this basement is rented out, or this place is rented out, but it was not registered. So there's a whole bunch of things that have happened in the last few years that has made this even more critical, that if you are going to be doing short-term rentals, or if you are going to be renting out multiple units in that property, you need to make sure it's registered. You need to do your work up front, run your numbers, have excess cash flow that you can use to renovate the place, register the place. And sometimes you have to apply for permits. Permits takes weeks to get through, but you're paying the rent, you're paying the mortgage on that property before the permit comes in. And even when the permit comes in, it takes a while for the renovations to be done, for the electrical guy to go in there, for the designer to go in there and retrofit the place to make it work for more than 2 tenants in there. So a lot has changed in the last few years, and I think that's where we're seeing all these changes.
Yeah, that's it. Like, yeah, and it's just the stakes have gotten so much higher. Interest rates, the cost of the properties, rent, everything has gotten so much tighter. So you're right. I think the GTA, it's just not as ripe for investment as it used to be. And like we said, maybe you got to move further out and check further out, but it's just like, there's a lot of things involved. It's not for the light of heart, it's not for the casual landlord anymore. This is a real business, and it could cost you. There's a lot of small-time landlords that bought in the last 2 or 3 years that recognize, like, this is not for them. This is not for them. The carrying costs, everything is just a little bit too much. So yeah, proceed with caution.
So how's the average person supposed to do this? Well, that's why we're here, right? You build a team, right? You build a team of competent people who can work through the numbers with you, have conversations on things you never thought about, and bring all the expertise of someone like Othniel, someone like myself, and some of the people on our teams that we have to say, okay, now let's look at this location. Let's look at this location. Let's bring in this designer. Let's look at this. We have people that work with the city officials to help you get permits. All those little things. Those are things that help me. Some of the relationships I built. I remember when I had an investment property way back, I had someone, my contractor had connections with someone in the city, and they were able to get my permits within about a month of me closing a property. Sometimes it's about establishing relationships. I think the premise is rental real estate, especially in the GTA, don't try to do it alone. You are going to get burned. You want to have the right people in your corner, and those who have your best interests at heart. They're not trying to sell you pipe dreams. They're being realistic on, here's what you can do and here's how you can do it. Not somebody who just wants to make a sale on a sell this property for you, get you in it, and how you take care of it, how you manage it, that's up to you, right? Mm-hmm. That's not the way to go. Not anymore. Not in GTA. So, buyer beware. It is still possible. It is still possible. You just have to look way outside, and you have to build the right team.
Absolutely. I think that's well said, man. I think we really provided a fair warning out there. It's not something to take lightly.
Absolutely. I hope this was helpful for any of our listeners. If you want to reach Othniel, you will see his contact will be in the show notes, and my contacts are in the show notes as well. Thank you once again for joining us for this episode. We will see you next time.
This is all the time we have for today. Thanks for listening to the True Wealth Podcast. Don't forget to rate, share, and subscribe to the True Wealth Podcast on your favorite podcast platform. Follow us on Instagram, Twitter, or Facebook at True Wealth Pod. We'd love to hear from you. Share your thoughts, ideas, and questions with us on our social media platforms or email us at podcast@truewealthadvisors.ca. And who knows, your question might be the subject of a future episode.